Hi, everyone. April Roberts, and happy Tuesday. Looks like the market is going up again today. Surprise, surprise. Wanted to reach out to you guys with my weekly little message. And this morning, I actually had a phone call with clients who, you have the button below to add 15 minutes to my calendar, and that's what they did. And what they wanted to talk about was, hey, look, we know our plan's on track. We trust you guys. But, as intelligent human beings, we're looking at things and staying in cash doesn't make sense to us right now. I love these kind of questions because it challenges our thinking so that we can really look into things. And so this couple I was talking to was like, hey, inflation really hasn't been that bad the last couple of months, in our opinion. And, the unemployment rate is really low. So this really got me to thinking, and I looked up 2007 at the end of the year, right before the big crash. Now, we know the market really started going south October of 2007. So I looked up, and basically what was going on then is inflation for the year of 2007 was at 4.1%. So about half or less than half of our current reported numbers, and unemployment in November of 2007 was at 4.5%. So we're about 3.5 right now. So, if you're looking at these as indicators of strength of the economy, then it is confusing what's going on right now. But if you can see that these numbers were actually about the same or better in 2007, right before the great financial crisis went into full swing, you can see that they're not always indicators of where the market's going. So our major concern stems from liquidity issues in the banking industry in Europe, the strong dollar driving the euro down and the British pound down, and some other stuff going on internationally. Now, many people say, yeah, but April, I live in the United States. I don't care. Well, today we live in a global economy. If you disagree with me, please connect below, hit reply, and let me know your opinion. Because again, if we have this ongoing conversation, we all learn more. But here's the problem. If a bank in Switzerland, for example, goes under, has liquidity issues, which happened this fall, but serious liquidity issues, it's like a house of dominoes because of the credit default swaps. This is going to affect all the banks in Europe. It's going to affect banks in the United States. And we could be looking at a Lehman-like situation, but starting in Europe this time. So we're just trying to get a handle on this, and there's a blackout on news about it. We're trying to get comfortable with that situation, and also just watching if this trend continues of the market going up every day and volatility coming down like it has since the election, then absolutely we will look to re-engage. But because we're being cautious about the worldwide economic situation, we are probably looking at about 25% re-engaging. Now, some of you may be confused because you're like, April, I saw some trading in my account yesterday. Yes, what we did is we were able to find some treasury accounts paying us about 2%, and we diversified into different treasuries and money markets so that we could earn about 2% interest while we're sitting there. We were attempting to do this with inverse US treasuries, and in fact, quarter to date, we've made about 0.7%. So this was working, but we trended out of one of them last week. So we found something a little more stable. So right now we're still sitting in safety. We're just getting you a little more interest. That was the trade you saw yesterday or today in your accounts. And going forward, we are watching the current trade, but if we re-engage, technology is telling us only about 25% to go in at this point. So again, if you have any questions, if you'd love to have a conversation about this, click below. You can schedule a 15-minute call on my calendar. Another huge conversation we're having right now is income. Do you have enough income for the coming year? It's a great time to look at it. Also, with the current situation, do we need to consider a Roth conversion? And we've had this conversation with many of you, but if you haven't yet had this conversation with us, click below, schedule 15 minutes with me, or reply to this email and let us know that you'd like to get in for an appointment sooner. By the way, these 15-minute calls have been so popular that my calendar is full through, I think, second week of December. So Patrick has added 3 hours from his calendar so that he can do 15-minute calls with you guys as well. So anyway, we're here. We look forward to talking to you. And by the way, we are really looking forward to our client picnic this Thursday from 11:30 to 2:30. Same location as last time. So we're all going to pray for beautiful weather like we had last year. And if you haven't had a chance to RSVP, today is the very last day you can let us know that you're coming with friends or family. So click below, let us know that. And also let us know if you have friends you'd like to bring to upcoming events. We do have dinner seminars in Sugar Land in December. So just show us interest. The team will reach out to you and let you know if we have room for that. We'd love to see you. We'd love to meet your friends and family. As always, when we serve you, we serve everyone you care about. Final thing is watch for the next and one more thing on December 3rd. People have a lot of questions about the economy right now. So continue to watch for these weekly emails. I will do one potentially the week of Thanksgiving. Let me get back to you only because the person who sends these out are on vacation. So as long as I can make sure someone with more technological know-how than me can make sure this is delivered into your inbox, we'll absolutely be sending you a recording the week of Thanksgiving. In the meantime, if we don't see you at the picnic, have a happy Thanksgiving. Share with us, reply, let us know what you're doing with your family. Are you back to the big Thanksgiving? Are you keeping it small? I'm going to my sister's house. I think there's like 18 of us, which is kind of cool because we haven't had anything that big since 2019. So have a great week. If you have questions, reply below or hop on my calendar for 15 minutes. Have a very happy Thanksgiving, and we can't wait to see you soon.